Yo, what's going on, guys? It's your boy Trillionaire Mac. Welcome back to another video. In this video, we're going to be breaking down a EURUSD day trade that I took this morning during London session. We're going to go over the confluences from top to bottom. This is going to be slightly different than our other trade setups. Why is this going to be different? Because this is going to be an intraday trade setup, right? So this is going to be something that, or an example of something that you would day trade, let's say during the hours of London session, or during the hours of New York session, or possibly during the overlap, right? Now, I'm not going to get into too much detail with my strategy as it relates to the timing. Timing is very, very important, and we do discuss timing within the institutional trading course. First link in the description. Feel free to check that out if you're interested in improving your effectiveness and efficiency on the charts. But we're going to talk about that in just a second, all right? If you're not a part of the YouTube family, feel free to subscribe, because if you're not subscribed, I have no idea what you're doing, mainly because not only do I drop these videos on a daily basis, but I'm also coming out with a lot of educational content this quarter that you don't want to miss, all right? The videos that I drop this quarter, I'm going to end up making them private, okay, next quarter. So be sure to subscribe to the YouTube channel, leave a like on this video, and hit that bell notification icon because you don't want to miss an upload, all right? With that being said, sit back, relax, and let's get into it. Now, before we get into the breakdown, okay, before we get into it, I wanted to show you guys this testimonial that I received from one of my traders in London, okay? So he said, "Hey, Mac Man, a lot of people call me Mac Man, LOL. He says, "I just wanted to say thank you, bro. I saved up Christmas money and purchased your course, and man, all I can say is wow, I didn't even realize how easy it would be to profit. I've been I've been trading other strategies with SMC concepts, and yours really opened up an entirely new understanding of the market. First week applying your information, and I'm up 11.95%. This is absolutely crazy. I love you, Mac. Thank you for the course and all the help you gave me. I'm forever grateful. Charlie, XOXO. Love you too, Charlie. I'm looking forward to seeing your growth over the next couple of months. I'm super excited for you, man, and I'm glad you were able to improve your understanding of the market." I get these testimonials all the time, and I just wanted to show you guys this one really quickly, mainly because my strategy as it relates to smart money concepts is different from anything that I have seen personally, and I get that a lot from a lot of different traders. How I trade is very, very simple. It's a 1, 2, 3 step process on one time frame, and it's a 1, 2, 3 step process on your entry time frame. Very, very straightforward, and really I just want to continue to assist people with understanding this information and just continuing to break through any challenges that they're having within the foreign exchange market. So if you're someone who hasn't yet purchased that course, click the link in the description and just go check it out, right? Check it out. And also, I'm going to be giving away, let's do 5. The first 5 individuals that contact me on Telegram that would like to purchase the course, I'm going to give you guys 25% off the course. I think that's what I'm going to do. Now, after the first 5, okay, I won't be giving any more discounts until springtime probably, because listen guys, I give away so many discounts and my team always contacts me and they're like, "Hey, someone just used a discount code. Who gave it out?" And I'm always the guilty one, mainly because I want to assist you guys with understanding this information, okay? Yes, course sales are great. I tell my team all the time, the course sales are great. They're fantastic, but really I want to help you guys, all right? And I try to give you guys as much information as possible without overdoing the information that I give, because I have to be fair to my mentorship students and I have to be fair to my course clients, right? Because they pay for the information and things like that. So I get a lot of questions in DMs about how do I do this, how do I do that? And guys, look, I'm trying to figure out a way to give you guys a little bit of an edge without overdoing it, right? So I'm trying to find that balance. But if you're someone who is going to be a part of the team, okay, I want to give you a discount, all right? Now, I know my team is going to contact me and say, "Mac, why do you keep doing this?" But guys, at the end of the day, if it were up to me, I would just give out this information for free, honestly. Like, I really want you guys to understand and dissect this information, just like our good friend Charlie over in London, all right? Also, Charlie told me that we should bring, in a message under this, he told me that we should bring back London Live sessions. So I'm thinking about bringing back London Live for those London traders who do want to trade right along with me, all right? So let's hop into the breakdown. So if we start on, let's go to the M5 time frame really quickly, and let's just break down this entire area here. Now, you could definitely look at this from an M15 standpoint, all right? We're going to look at it from the M5 standpoint, mainly because, here, let's do this. Okay, perfect. Mainly because the M5 time frame gives us just enough information to really take advantage of this entire area. When you are, or when I am day trading, excuse me, when I'm day trading, I'm using the highest time frame that I'm really using is going to be the M15, right? Most of the information that I use when I'm intraday trading within a session especially is going to be closer to the 5-minute time frame, the 1-minute time frame, using maybe the M12 or the M15 to look for any valid zones or any type of information that's going to tell me where price wants to move, right? So if we go to the let's go to the M15 really quickly just to look at this. So if we go to the M15, we can see that price creates structure, right? And structure is king. So we see this, we have this lower high here, we have this lower low, we have this lower high. Hey, what's going on, bro? Give me like maybe 10 minutes. Sorry about that, guys. So we have this lower high here, we have this lower low, and then we see that price continues to test these highs, right? So once price continues to test these highs, we then create a higher low here, and finally we break above these highs that were created, okay? Essentially telling me that price wants to move up. Now, does price have to continue moving to the upside? Absolutely not. When you're intraday trading, you're just looking for, let's say, maybe 5 to 12%, right? And you're going to, and I'm going to show you guys also how I target my targets and things like that, because I think it's going to be very, very helpful for you all. But you're essentially going to use that M15 time frame to figure out where the market is going, okay? I don't always use the M15 time frame, okay? And those of you who have the institutional trading course, you understand the strategy from top to bottom. So, you know, you understand exactly what's going on in my head, you know, within session times and things like that. And I'm not going to dive into that information too much because I am going to be releasing a video quite soon about session times, why they're important, and why I take my entries during specific sessions, all right? Anyway, let's go ahead and drop down to the M5 and let's talk about this entire area. So after I hopped on the M15, okay, just to understand structure, even if we go to the M5 time frame, you guys can see a little bit more detail about what structure is actually doing. So essentially, we are creating higher low points, okay, and tested highs. For those individuals who understand market patterns, you could call this somewhat of a wedge, whatever you want to call it. Essentially, buyers are getting stronger, okay, but sellers are not getting stronger at all. Sellers are holding this area here, okay, this supply area here, but they're not getting stronger. As buyers continue to get stronger, we're essentially squeezing, and then we're going to look for a push, okay, after we break through this squeeze. Now, I don't follow retail trading patterns, okay? I don't follow retail trading patterns, but that is the psychology behind this retail trading pattern, which you guys can consider a wedge, which is something like this. Essentially, highs are being held, okay, but buyers are getting stronger, creating higher lows along the way, and then you're looking for that nice push, which is why we were able to capitalize off of this here and gain 6.96%, only risking 2.5 pips. All right, so let's back this up just a little bit. And I might go through this kind of quickly because I'm trying to fit in as much information as possible between the 8 and 12 minutes that I have for you guys. All right, definitely don't want you guys to get bored on these videos. But I can talk a whole lot. Those students of mine, if you're a student of mine, you guys know I hop on the one-on-one sessions, I hop on the group webinars that we have all throughout the week, and I talk a lot because I try to give you guys as much information as possible. And that is what you can expect, just like Charlie here, that's what you can expect when you become a student of matrix trading, right? I literally give you guys my all. And that's usually why the webinars are 1 to 2 hours every single time we have a webinar. Anyways, so I have my zones marked up, right? We see that we have this nice push to the upside. Price trades into this supply, okay? Here we have a failed reaction when price pushes to the downside, and then demand comes into the market and overall takes out this supply region here. Let's go down to the M1 time frame now, okay? So once I had my zone, which was here, and remember guys, these zones are based on the higher time frame. I take my entries when I'm intraday trading on the M1 time frame, but just know that my zones are never based on the M1 time frame. My zones are always based on that higher time frame, and I use the M1 time frame to really dissect price to figure out where is going to be the best area to take my entry, which I'm going to go over as well. All right. So we can see that price trades into this supply zone based on the higher time frame. Okay, we create a failed reaction, demand comes into the market here that overpowers supply. So this here is the demand that is responsible for taking out this supply region here, and this is where I'm going to essentially look for my entry confluences. All right, now for those of you who understand inducement, okay, this here is a fantastic example of inducement. Okay, we see that price creates this range of equal lows here, essentially, okay, right above our demand zone. Okay, so essentially we're looking for this liquidity, which is resting here, to be swept. Okay, we're looking for price to trade into this demand zone, and then we're looking for certain entry confluences that tell us that we are ready to continue to push to the upside. But in order to push to the upside, price has to collect fuel. Okay, not only do we have to trade into a supply or demand region, which in this case is demand, buyers coming into the market, but we also need, okay, we need a sweep of some type of liquidity, which is in the form of inducement in this case, okay, which is simply just liquidity that's resting above this demand zone here. All right, so what does price do? Price sweeps this liquidity here, okay, the liquidity resting here, uses this as inducement, taps into our demand zone, and then we're going to look for our entry confluences. So here we see that we have supply came into the market. All right, we know that this right here is a supply region. Price trades into this supply, pushes back down, and once it pushes back down, we actually sweep all of this region here with this wick to the downside. Now, if you're someone who has the 15-second time frame, the 30-second time frame, the 5-second time frame, I want you guys to really dissect this area. This is going to give you a lot of information just going down to those second time frames and seeing what price is actually doing within this area. Now, I like to stick to the 1-minute time frame, especially when I'm on YouTube, because I know that a lot of you guys may not have a Pro Plus account to go down to the second time frames, but also I want you guys to understand that you don't have to use those time frames. You don't have to use the 1-second time frame. You don't have to use the 5-second time frame or the 15-second time frame. You can go down to the 1-minute time frame and have these pristine entries with 2.5 pips of risk and collect, 6 to 12% on a consistent daily basis. That is what is important. That consistency is very, very important. Like my friend Charlie here, and Charlie, I'm going to keep bragging on you, man, because I'm super proud of you. I understand, where you started when you first started trading. You showed me all the losses that you acquired and all the losses that you had, and you being up 11.95% in the matter of a week, that is essentially passing an FTMO challenge. That is absolutely bananas. Super proud of you, man. Right? So what does price do within this area? One, we're looking for some type of failed reaction first, right? We have supply here, but we want supply to be taken out, right? We don't want this supply to hold. The reason why is because we want to see price continue to move to the upside based on the main fact that we have demand here. So what does price do? Price creates this reaction here. We react, we push to the downside, and then price starts to create bearish structure. That's not necessarily a bad thing, mainly because we want to see our sweep of liquidity before we see our change of momentum, right? We want price to sweep liquidity. The liquidity that is being swept is going to be the fuel for price to change momentum, okay? Anytime price is headed within an uptrend, okay, it has to sweep some type of liquidity in order to gain enough power to change the trend of the market, okay? If you do not sweep liquidity and you have a change of like market structure, for example, let's say we're pushing to the upside, let's say price does something like this and then pushes to the downside, this is very, very weak. This is a very weak transition, meaning that price could trade into something here and then continue to move to the upside, and that would be completely understandable. And then we would see something like this for price to continue moving in the direction it was already going in. But anytime you see that sweep of liquidity first, and then you see that break in market structure, that is going to give you a lot of confluence to then look for possible sell opportunities. All right, now I know I went through that kind of quickly. If you guys want me to do a full breakdown on this concept here, I need at least 15 people to drop in the comment section that you want to see that video. If we have 15 people that drop in the comment section that you want to see that video, I will do an entire video breakdown, part 1 and part 2, 30 minutes each. Ooh, should we do 30 minutes? That's a lot of information. We're going to do 30 minutes. We'll do part 1 and part 2, 30 minutes each on the psychology behind changes of momentum. I'll show you guys how to backtest changes of momentum, and I'll show you guys how you can apply that to your trading. All right? Man, my team is going to get on me. I already know. But if we have 15 comments of you guys saying you want it, guess what? Who cares what the team says? I'm going to drop that information on you guys, all right? So back to the breakdown, because like I said, I'll get off topic. So we have that sweep of liquidity with this wick to the downside. I want you guys to pay attention to wicks. Wicks are very, very important when you are trading. Remember, Only banks, funds, and institutions, only huge players with money can create candlesticks with nice wicks on them. Okay, so in this case here, this wick is responsible for sweeping this entire region here. Okay, not only do we sweep all of this, but we also trade below this wick here. That is very, very important. It's all about the details. Once that sweep happens, what does price do? Price then changes momentum. So essentially, we collected enough fuel to then change the momentum of the market, right? So once we change that momentum of the market and we finally broke through this supply here, then what are we waiting on? We're waiting on price to trade back into our point of interest. In this case, our point of interest happens to be this candle based on how sorry about that. Let's change it to this. This happens to be the area that I refined to based on my institutional trading course, which is the first link in the description, right? And if you guys want to know what video to check out in order to see, in order to understand this concept here, once you go to the course, this is the video you want to check out. Give me 1 second. All right, so once you guys tap into the course, this video all about entries is going to break down exactly how I take my entries, the exact confluences I look for, all the way to the T, because there are certain confluences that I have never mentioned on YouTube that I do look for when I am looking for an entry, and that is what makes us different from other smart money concept groups. Okay, that is what makes us different. My entry method, not only my entry method, but really how I look at the charts, really, right? So feel free to check that out. First link down in the description if you're interested, and that will break down the entire refinement behind this candle here, why it's important, and why I looked for price to trade back into this candle before taking my entry. So now let's talk about the entry. So whenever I am taking my entry, okay, I am always going to have a limit set. Okay, it's almost like catching a falling knife, right? I'm always going to look for price to trade into a certain price level, okay, and then reverse. Okay, and when I'm looking for sells, same thing. I'm always going to look for price to buy into a certain price level and then sell. Okay, that is exactly how I take my trades. Why do I take my trades like that? That's because that's how the banks trade. The banks have specific prices that they want to see price tap into. They place their orders, and then they expect price to run the opposite direction. If you're not trading like the banks, then you're trading like the retail traders. If you're trading like the retail traders, then you're only trading concepts and information that make up 5% of the market. And that is not what you want to do, right? You don't want to be on that side of the market. You want to be on the correct side of the market. So set my limit here. Okay, this was my entry. And if we look at our original risk, okay, based on, and remember, everything that I do is based around rules. Okay, there are rules for entry, there are rules for take profit, and there are rules for stop loss. If you are someone who can follow 1, 2, 3 step instructions, then you're someone who can use the course information just like Charlie here, and you can apply it and you can produce results the world's not familiar with, increase your effectiveness and efficiency on the chart without a doubt. Okay, we've seen this happen so many times. You guys have seen so many testimonials. I know we're just now getting back into the swing of things with it being the first week in January. Okay, with posting and getting back into trading and things like that. So I want to thank you guys for being patient and working with me, especially those of you who continue to hit me up through December wanting more content. This is for you guys, all right? So let's keep going. So it told me, based on my rules, okay, my rules told me to risk 2.3 pips. As you guys know, I never like to do anything different than a whole number or a half number. So because I'm at 2.3 pips on this here, okay, I simply just rounded up to 2.5. Now, you guys know me. I'll never risk anything less than 1.5 pips, but most of the time, my stop losses are going to be between 2 and 5 pips, okay? Usually closer to 2 pips. On average, it's around 3.5 pips, all right? With a small stop loss like that, that is why you can risk 1% of your portfolio, and you can expect 6 to 12% back on every single trade. Right? And I do have students who just target 5R, so they target 5% on every single trade, and they are very successful, especially if you are an FTMO trader. Doing something like that is going to be in your best interest for sure. All right, but we'll get into that in another video, because I'm going to drop a video for those of you who are taking FTMO challenges that need a little bit of assistance, but maybe you don't necessarily know what questions to ask, or you don't know what route to take. I'm going to drop a video for you because I've been getting a lot of DMs about, hey Mac, I'm new to trading, I want to take an FTMO challenge, but I don't know where to start. All right, and I'm going to help you guys with that. So that was the entry. that was the stop loss. Okay, we just simply rounded up, half number. And now let's talk about the take profit. So you guys know I like to target swing highs and swing lows for my take profits. When I am trading intraday, okay, I'm never going to just look at one time frame to target. All right, I'm always going to look around, and usually I'm going to look around the time frame that I enter and the time frame that I find my zones at. So the time frame that I entered is on the 1 minute time frame, right? So in this case here, I'm going to simply target a swing high. A swing high is simply just a high that forms with two lower highs next to it. So we see lower high here, then we see higher high, right? And then we see if we're going to the next high with this push to the downside and this push back to the upside, we can consider this a lower high, or you can come down here and you can consider this a lower high here. Now, there are multiple ways that you can look for structure. Within my institutional trading course, I break down exactly how you should look for structure and also how to practice looking for structure. It's practice, 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 practice. That's why, as you guys can see, these structure points here are quite spot on, right? Once you understand the concept, it'll always be with you, all right? And that's one thing that I do love about trading, right? So this was my target here, this swing high here, all right? Mainly because one thing that you guys have to understand is timing. As we continue getting closer to New York session, usually there could be a possible reversal. So after I got into this trade around 2:49 a.m., okay, as we continue moving closer to 6 a.m., 7 a.m., 8 a.m., we can possibly, like we see here, see a reversal. And that's something that you guys want to keep in mind. So when I am up 6.96% and I have hit a swing high in this case, since I'm buying, okay, I'm going to keep in mind the fact that price could, let's get rid of this. There we go. That price could possibly reverse on me during New York session before continuing in the direction that it wants to go in. And that is something to keep in mind. The video that I dropped regarding session time should definitely help you guys out with that concept as well. All right. This essentially was the entire trade. All right. We also took an entry here, or I took an entry here, a risk entry, since this was my extreme and price continued to push to the upside, but we're going to break that down on another video. This was the entry, this was the stop loss, this was the take profit, and this was the result, 6.96%, which is 69.6% of an FTMO challenge completed in a day. All right, that is exactly how we trade, only risking 1% of your portfolio. With that being said, I'm going to catch you guys on the next video. Remember, if you guys want to see a video going over changes of momentum, changes of character, market structure, things like that, part 1 and part 2, okay? 60 minutes worth of content, 60 minutes worth of education. I need you guys to drop in that comment section below that you want to see that. If I get 15 people, guess what, guys? We're on. We're going to drop it, all right? So I'll catch you guys in the next video. Much love. Peace out.